Hey everyone, Bill McCafferty here. Today is Friday, December 11th, 2020. Hope all is going well. Hope you're getting ready for the holidays. I hope you're wrapping up your year. You're getting ready for 2021, right? A lot of crazy stuff still going on. So you need to hang in there. You need to stay safe. You need to stay focused. And you need to make it happen. So just want to give a shout out and a happy holidays to everybody. Just want to thank everyone. From clients to just, everyone in the business here, anyone that's watching the videos. Once again, any comments, feedback, both negative and positive, is always appreciative. So on Fridays, I've been doing my episode, A Day in the Life of an Asset Manager / Note Investor. Today is episode number 32. So like I do every episode, I go over the client portfolio, which is PMR2. So right now, PMR2 is managing 140 non-performing note files, mostly seconds, but some first in there. New files boarded since the last episode, which I believe was about 2.5 weeks ago. One file. New borrower contact, 2. Loss mitigation forms sent out to borrowers. That number's 2. Have not received any loss mitigation forms back to process. I did send out a borrower option form. We did receive and process one loan modification. Also sent out one loan modification. That's due back next week. Payoffs processed. We had one payoff. Real nice payoff for a client that was processed last week. Sheriff sales. We had one sheriff sale. That was a week and a half ago. It was a non-performing first in Ohio. We actually got bought out by a third party. So third party, outbid our bid. This was a non-performing first, like I said. So usually takes about 1 to 2 months normally. We'll see if everything is going to move normally here. And that's when the confirmation for the sale will go through and the funds will be released to us. So that's a good deal there. REO property sales, 0. No new bankruptcy files. No files wiped. And no files sold. So that's what's going on. Not a lot. I always say every year I'm managing a portfolio of distressed assets. It seems like a lot of the borrowers from Thanksgiving to the new year kind of go quiet, probably, trying to enjoy the holidays, get themselves together. And then once the new year hits and we're in the new year, it's when it kind of seems like it starts picking up and homeowners want to get their distressed debt resolved and they start dealing with their issues. So always expected to be slow this month. That's why I'm doing a lot of buttoning up my systems and processes and just getting a lot of things situated for tax time and being ready to move into 2021. Not too much going on in my own portfolio. So today I'm going to talk no case study. I'm going to talk some general information on corporate structures, entities. So in my world, I have 3 companies. The 2 that I'm going to talk about are the portfolios, PMR2 and PDRS. So PDRS is an LLC. It's a limited liability company. It's more of a pass-through entity. It gets taxed differently than corporations. And that's my portfolio. So it owns assets. It owes money. Stuff comes in, stuff goes out. It doesn't really sell a product or a service, so it's more of a pass-through entity. And that's what most real estate investors will hold real estate in, an LLC, both property and mortgage notes. What I want to talk about today is PMR2. So PMR2 is an LLC, but it's taxed as an S-Corp. So one thing that I set out in my businesses and that I wanted to figure out over the years is, what is the best way for me to run stuff through my company? What's the best way for me to pay the minimum taxes? And what makes sense for me? So what I'm going to share with you makes sense for me and what I do. So, you always want to talk to your accountant, talk to attorneys, talk to different investors to figure out what makes sense for you. So PMR2 is taxed as an S Corp. So I started seeing a gentleman named Mark Kohler about 5 years ago. He's an accountant, an attorney, and an investor. He's got a lot of good information. And a lot of the stuff that I learned from him, I incorporate into my businesses. I talk to my accountant about it, and we kind of adapt. I actually did a Mark Kohler virtual seminar last weekend. Once again, picked up some good nuggets, reassured to me that I'm doing a lot of the things that I'm being told by him, and I'm incorporating them into my world and my business. So one thing that he mentioned, years ago was that, if you're selling a service or a product and you have made over $50,000 off that service or product 3 years in a row, and it's an LLC, it may be time to have that taxed as an S Corp. So with that said, PMR2 was doing well with its service that it was selling. Once again, PMR2 does not own anything, and it doesn't owe any money. It's just, it offers a service to investors to manage their asset, and I get paid off of that as a service commission-based fee. So it made sense for me to bring that back to my accountant. And at that time, he kind of agreed. So we moved forward. Once again, it's an LLC, but it's taxed as an S Corp. My accountant had to file some paperwork with the state so we could do that. So one of the biggest tax benefits for an S Corp is that the business income, as well as many tax deductions, credits, and losses, are passed through the owners rather than taxed at the corporate level. So once again, I'm the only person in my S Corp. So this just made a lot of sense for me to run everything through my S Corp. And that's what I began doing. I believe this is the 5th year that I have the LLC taxed as an S Corp. LLC owners, they pay self-employment taxes for all their income, whereas S Corp owners will pay less on this tax provided that they pay themselves, a reasonable salary. So that's what we decided to do. So PMR2 pays Bill McCafferty every month a payroll. It creates a paycheck for me. It allows me to create a W-2 income for myself, and it allows me to move money. And when I do that, it allows me to pay taxes both from my corporation and from myself every month. I pay taxes quarterly also, and clearly got to pay them at the end of the year. But it was a way for me to start paying myself and running, money through my corporation, which is taxed differently. And once again, I'm just an investor. You want to talk to your accountant. You want to talk to attorneys about this type of stuff. Some other things. S Corps have more advantages with self-employment tax compared to LLCs. S Corp owners can be considered employees, like I said, if they're paid a reasonable salary, right? So when I pay myself a reasonable salary, FICA taxes, which are Federal Insurance Contributions Act, they're taken out of my pay every month. That means I'm paying into Social Security and Medicare from both sides. The S Corp is doing it, and Bill McCafferty is doing it. And there's just a lot of advantages. I actually run my whole world through my S Corp. Every year, my S Corp actually has a corporate meeting. We go somewhere. My wife and I, the kids may go, but it's really a corporate retreat. We actually have meetings. We got to document stuff. We got to record stuff. And we just talk about the business. We talk about things that we could do better. We talk about, just the business, the year that just passed and where we're going. It's a good way to kind of, settle in, enjoy ourselves a little bit, and look at the business from more of a retreat avenue than actually, being in the house and working the business. So, like I said, we do a corporate retreat every year. I run a lot of my insurance stuff through it. We get a deduction for that. There's just a lot of different things that I run through my S Corp. And I leave it up to my accountant. He decides, what I can claim and what I can't. If I run something through the S Corp that I can't claim on my taxes, I don't do that. So as much as I run everything through the S Corp, I rely a lot on my accountant to make sure that I'm doing everything correct, and that what I'm running through, I'm allowed to deduct and take advantage of. So S Corp is very powerful. A lot of people want to understand why people can write a lot of things off and, actually make a decent amount of money on a product or a service. But at the end of the day, they're showing that they don't make a lot. That's because you can run a lot of stuff through the S Corp. And once again, I'm a one-man show, so this made a lot of sense for me as an S Corp. So that's what I wanted to talk about. Corporate structure, at least with what I'm up to, both with my own portfolio, right? PDRS, it owns mortgages, it owes investors money. It's an LLC. It's more of a pass-through entity to run stuff through, whereas PMR2, it's an LLC, but taxed as an S Corp. Makes a lot of sense for me because I offer a service to other investors. PMR2 doesn't own anything. PMR2 doesn't owe any money. It's all income produced by a service fee and a commission. So I hope you enjoyed that. Once again, I'm not sure if I'll be on again before the end of the year or before the holidays, but happy holidays. Take some time to really digest what's going on. Be thankful, count your blessings, show gratitude to others that have allowed you to get to where you are. You should be reviewing everything. You should be getting ready to wrap it up at the end of the year, and you should be well on to 2021 and knowing where you're going. So I hope you enjoyed that. Have a great rest of the day and have an awesome weekend. And once again, happy holidays. Thank you.